Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Dan Rohinton. He's the portfolio manager at IA Global Asset Management. He'll be joining us for the hour. In 30 minutes, we'll be joined by Rachel Bartholomew. She is the CEO of Femtech, the country's first national network dedicated to advancing women's health. And we want to hear from you this morning on First Call. Reach out with your questions on Canadian and global large caps, and we'll have Dan answer as many of them as he can at the end of the show. The number for that, of course, 1-855-326-6266. And we'll open the phone lines about 30 minutes from now. You can also email us, firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Oil prices are surging to their highest levels in 4 years as traffic in the Straits of Hormuz has come to a halt amid the escalating conflict in the Middle East. The strait, which handles as much as 20% of the world's oil shipments, is now at a standstill. Some experts say a halt lasting more than 25 days could cause storage tanks to fill, forcing a cut in production. Shares of defense stocks, Northrop Grumman and Lockheed Martin, are up in the pre-market. 4.5%, 5% for both of them. This is the conflict in the Middle East escalates following the U.S.-Israeli attack on Iran. The defense giants, which are responsible for developing drones, aircraft, and missiles, are seen as key companies for the U.S. As geopolitical uncertainty continues, investors are moving into defense stocks. China has lowered its anti-dumping tariff rate on Canadian canola imports. The tariff was dropped to 5.9% from 76%. The move comes after the Chinese government dropped the original tariffs on Canadian canola products. Beijing says an investigation found that shipments were being dumped, causing material injury to the domestic industry. The levies will be in place for 5 years. Well, of course, over the weekend, U.S. and Israeli forces carried out coordinated strikes on Iran, leading to a pause in tanker movements and a sharp escalation in regional tensions. For more on this, we're joined by Bloomberg's Tyler Kendall, live from Washington. Tyler, thank you very much for joining us. What is the latest from Washington? What are we hearing?
Hey, Roger, good morning. Well, we heard from President Trump in recorded remarks last night where he said that the U.S.'s resolve is stronger than ever and indicated in a brief telephone interview with the New York Times that the U.S.'s military campaign could be sustained for 4 to 5 weeks if necessary to accomplish the U.S.'s objectives. President Trump has outlined various goals of this military operation, though one of the big questions for the White House is exactly how are they measuring progress? What would be considered mission accomplished, as the president confirms that the U.S. has hit hundreds of Iranian military targets over the weekend. Now, a group of senior administration officials did brief us reporters in a call over the weekend and said that a large driving factor of the strikes starting was due to what they called disappointing progress in the Iran nuclear talks that were happening just last week. As you well know, there had been big disagreements about exactly whether or not Iran should be allowed any domestic enrichment capacity, but there were also huge disagreements about the parameters of what the talks should include. The U.S. in particular wanted some other key agenda items to be discussed, most notably Iran's ballistic missile program, as we see a lot of the targets going after that missile infrastructure, as well as Iran's support for proxy militia groups. Plus, a person familiar with the matter is now confirming to Bloomberg News that the CIA had been monitoring the Iran Supreme Leader's movements for months, and that the U.S. ended up altering the timeline of the strikes based off of those findings. So there's a lot that we still have to watch in the coming days as this White House maintains that the military campaign is going to continue, in President Trump's words, in, quote, full force.
And now there was an offer, I think, from the president to come to the table for Iran. Is that still there? And has Iran responded to that at all?
So it's not totally clear if that is a viable off-ramp at the moment. President Trump did indicate in this interview with the New York Times that he would be willing to negotiate with the transitory Iranian government right now being led by this 3-person interim council. However, we did hear from Iran's security chief overnight batting down reports that Iran had reached out to the U.S. through mediators to discuss negotiations. So it's not totally clear at this moment, particularly as you also hear President Trump calling for the Iranian people to overtake their government. I will point out that we did get a pretty critical statement from Oman's foreign ministry. Of course, Oman had been mediating the discussions before the military operation over the weekend, and they said that Iran was interested in, quote, serious efforts aimed at de-escalation. But again, the official word so far from the Iranian government that is currently in place in this acting capacity is that they're not coming to the negotiating table anytime soon.
And in the theater itself, are we getting any more details about the Americans who were killed and also the American planes that went down?
So at this point, those two separate incidents, we did hear from President Trump in these recorded remarks last night, where he said that the U.S. is grieving the lives of those 3 American service members who are lost and that he is praying for the wounded. But he also cautioned that more casualties could be ahead. Of course, this morning we then got to the report that these American fighter jets had went down in Kuwait. According to the Kuwait Army, it was a mistaken friendly fire with Kuwaiti forces, but ultimately, thankfully, it appears that all of those service members are going to be okay and that there were not casualties sustained from that incident. So it's going to be something to continue to monitor, as this White House has maintained that it's not going to let up on its military campaign. And we're learning a little bit more about which targets they are going after, including senior leadership in the IRGC. There's also a huge emphasis on going after Iran's naval capacity, as the U.S. confirmed yesterday that it had sunk 9 Iranian naval vessels. And then we've heard from a senior Israeli military official that they are really targeting Iran's ballistic missile capacity. That is something that our own analysts at Bloomberg Economics are tracking incredibly closely, because that could give us a little bit of an insight into how long Iran would be able to maintain its own retaliation. Roger, the latest estimate from the Israeli government is that they have knocked out about half of the launchers required for those ballistic missiles, which would significantly deter Iran's retaliation capacity.
Okay, Tyler, thank you very much for that update. Bloomberg's Tyler Kendall. And for more on how this will shape the markets for today as we get ready for the open, let's bring in our guest for the hour, Dan Rohinton, portfolio manager at IA Global Asset Management. Dan, thanks as always for joining us.
Of course.
Normally it's a simpler day, but holy cow,
Yeah.
that changed over the weekend. We're seeing it a little bit in the futures and oil. No real surprises where everything's going.
Yeah, and I would say, honestly, the reaction is relatively muted, as it should be, because the war is already over. And that's a bit of when you really think through the second order effects, the ability to close the Strait of Hormuz involves either mass mining operations like happened the last time around, or the ability to launch naval assets. Those are gone. So the idea that there's going to be a broad closing of the strait for a prolonged period of time, which is the real medium-term shock to oil prices, is just realistically not in the capabilities of the current Iranian regime. So we're already, call it...
Whatever that regime is right now, too, is the other thing.
Yeah, the outcome of the war is determined. The conclusion of the conflict is not done yet, because the next state is going to be the streets of Tehran and the people that are the regular population. So the U.S. involvement is already at its, call it, terminal phase, if you will. So when you think about what it means for oil, it means that realistically, the next set of conversations don't involve oil. Mm-hmm. So the spike, we're just back to last April. So we need to keep that into context. And I would say this probably fades more likely than not. And then the same thing on precious metals, which is the other side of the conversation, because precious metals is a broad risk-off asset to be a participant, and that's what the investors are there for. They're not there for peace and stability if you own gold. You're there for those headlines that are scary. Once again, I think the muted reaction tells you that the market is correctly discounting the fact that the worst case scenarios for oil supplies and a regional proxy war that is expanding are being taken off the table.
Do you think there's more of a plan this time around? I mean, you look back to Iraq, and they went in and they won, mission accomplished, except it wasn't, because they didn't have a country afterwards, and it devolved into sectarian violence. Any concerns of that happening here, do you think, now that they've cut off the head?
Well, I think it's important to look through history, right? So there are 4 truly great Eurasian civilizations of antiquity. There's the Chinese dynasties, there's the Indus Valley civilization, which is the Indian civilization. Then there's the Persian civilizations. There's been 3 iconic empires, the Achaemenid, the Parthian, and the Sasanian. and then there's the Greco-Roman civilization out to the west. So there isn't an Iranian around the world that doesn't know about the Shahnameh, that doesn't know about their kings, that doesn't know about their history. So I think it's important to appreciate that what happened in Iraq, Syria, and other parts of the conflict that were quagmires, as I would best describe it, this is a civilization that is truncated into a country today. And I think that is a very different conversation. There's ethnic minorities, there's tensions, there's things like that. But I think the scenario that there's a sectarian war that breaks out like it did in Iraq, I just think it's highly unlikely.
And if the people do rise up, as Trump was urging them, this could devolve into civil war. Where would that leave the strait? Where would that, could that be a victim of it at all?
Yeah,
or can it be contained in Iran itself, essentially?
I think it's in the cities, right? Look at what happened a few weeks and a few months ago. Those were protests in the cities. They were directed at the government. So there wasn't that type of broad fracturing as you see in other societies that had those fault lines in the first place to those degrees. So to the extent that there's conflicts on the streets, which I do think that when I say the outcome is determined, that it's over, but the path forward will continue, is those conflicts on the loss of life will happen on the streets of Tehran, Isfahan, Shiraz, so on and so forth. So that just doesn't involve the Strait of Hormuz, which as portfolio managers and investors, that's what I'm talking about, is that it will not be led that way. And I think maybe one thing I do want to just quickly tease in on, you got a little sense of how the Iranian regime was hoping to counter the US and Israeli moves, and it was to attack the Gulf states by basically pressuring Dubai, Saudi, Qatar, UAE, sorry, I already said Dubai, with UAE and Bahrain and so on and so forth, to create economic pain for them so they run to the US and say, stop doing this, let's go settle for peace. But I think we're mostly past that stage now too. So you saw how they were going to play the asymmetric warfare game, and it doesn't seem like it's working.
Okay, we got lots to talk about this hour, so stick around. Thanks as always, Dan, for joining us. Dan Rohinton is the portfolio manager at IA Global Asset Management. Up next, Anthropic has been pushed out of a major Pentagon deal, and their rivals are moving in fast. We'll break that down. Unfolding in the Middle East. Let's see how things are shaping up on the markets. We'll start with the U.S. futures. Not surprising, some downward pressure today. The Dow off by a little more than a point. The NASDAQ 100 off by 1.4. And the S&P 500 off by a little more than a point as well. Travel and transportation feeling it the most. Defense and oil stocks, though, are jumping. Heading to Asia. Sell-offs pretty much across the board, except for the CSI 300, which is a bit of a wash. But you can see the Nikkei off by 1.35. The Hang Seng down by more than 2. Financials, tech, auto, airlines, broader cyclicals dragging the markets down. Going over to Europe. Similar situation. You can see everybody nervous. Some sell-off happening there as well. The FTSE down by 1.4. The CAC 40 by nearly 2%. And the DAX by more than 2.35%. Defense and oil, though, seeing some increases there as well. And the TSX, after a banner week, ended the week down a half point, still well above 34,000 a week of record highs, except for Friday, pretty much. And some of the winners and losers from Friday. CCL Industries up 6.86%, IA Gold and Silver 5.8%. TerraVest Industries going the other way, down 7.6% roughly. Aritzia off by 7.8%. And the metals. Yeah, not surprising. Gold up almost 3%, above 5,400. Safe haven for investors. Silver also on the way up. It's at nearly 95 right now, up 1.5%. Copper off slightly, but still above $6. And oil now. Taking a look at Western Canadian Select. It closed up on Friday, 3.5%. Then we had the weekend. Take a look at what WTI is doing right now. It is up almost 8%, up above $72 a barrel with everything that is unfolding. Well, Anthropic's clash with the Pentagon has escalated, with the U.S. declaring the company a supply chain risk and giving it 6 months to exit its defense work. To break down what's driving all this fallout and what it means for the broader fight over who sets the rules when it comes to AI and defense, we'll bring in Dan Rohinton of IA Global Asset Management. Dan, another interesting AI dilemma, fight. What do we want to call it? Everybody seems to know what to do with AI, but nobody seems to know what to do with AI.
I mean, and let's take a step back. So what is this all about? This is about the U.S. government's request for basically broadly unrestricted access to Anthropic's models. That's largely the deal when you're working with the government, is you don't really get to decide what they can and what they can't have, because they're a large-scale customer, and they're also,
they're also the U.S. government.
They're also the U.S. government,
Yeah.
and they're also the Chinese government. So the idea that technology isn't deeply interwoven with foreign policy, I think Anthropic is probably going to be hung out to dry here, because realistically, all the Chinese labs are probably working closely with the Chinese government, and the U.S. government is demanding the same of their companies. And so terms of service, things like that, just don't make sense in the context of geopolitical competition, which is where AI has become the primary theater of this competition.
So what is Anthropic hoping to accomplish with this? How would they win out of this?
I don't think they can, because it goes back to, if you had maybe I'll frame it another way. If Anthropic was the best AI model company with by far the best models and no one else was close, then the U.S. government or any government, including Canada's, might have to compromise. But at the end of the day, they don't. They're good, they're excellent models, but they're one of several. So I think in this type of oligopolistic large language model world, I think Anthropic is going to probably be out in the desert a little bit. And I think it's interesting because it's not just this that happened more recently. Anthropic actually missed an opportunity with what was called OpenClaw or Claudebot, where they sent a cease and desist letter as this open source project was going viral. So it's been a rough few weeks for Anthropic, but generally speaking, what it comes down to is these are all well-funded companies. It's not the end of the world for Anthropic or OpenAI, whoever wins or loses the contracts, but the idea that we are not going to see a deep weaving of AI into all forms of the government, and that's across Canada, US, and China especially, is a preposterous notion. So I think I'm surprised it happened so soon, Roger, but I'm not surprised that it is happening.
Could you see Anthropic try and come back to the table with its tail between its legs?
Yeah, depends how much they want the contract. Because remember, there was a time where Google had this kerfuffle with the U.S. government as well.
Yeah.
Eventually, just all sides come around to, well, these are big customers, and they also are the ones with the military that are protecting us. So
it's good to do business with them.
It's good to do business.
It's not a bad thing.
Yeah.
So who moves in there then?
I think it's probably going to be OpenAI or xAI, because xAI, basically Elon Musk's enterprises, have a lot of arrangements with the Pentagon already, or Palantir and a bunch of the others. So there's lots of competitors on the field. But I think the key message to really see here is AI is such an important technology that in even what seems like such a primitive, we're in such the primitives of where AI is going, and it's already being brought as a front and center geopolitical and geostrategic issue. This tells you how prolific it has the potential to be, which is why the big nation states are basically saying, we want you fully under the tent. Anthropic, probably going to be left out in the cold. They'll probably die on this hill for this contract, but who knows what the next two contracts will look like.
And how important is it to you, do you feel, that the government has control over AI, that it's putting it like more control than Anthropic wanted to give up?
I mean, it's an interesting conundrum, right?
Yeah.
So on one side, you can say that the government should not have control of this technology, but then you're effectively outsourcing the control of the technology to Dario and his 6 co-founders. So do you want a standing committee of 6 people making decisions on important tech, or do you want the government to make decisions on important tech? I don't think there's a great answer.
No, there isn't. There isn't on that. I'm sitting and thinking about both. No.
Yeah. So it's not that the saying no to the government is some moral high ground to stand on, because then you're effectively saying, imagine if the CEO of Coca-Cola could make all the important decisions in America. I don't think we'd want that either, because that represents dictatorship. So it's a tough it's tough morally, it's a tough conundrum, and there's no great answer. But at the end of the day, I think the important point, which tells you the importance of this technology, is just so fast this became a national security issue. And I'm confident it's a national security issue for every other government around the world.
Has it grown too fast? Do you think, can they get their head around it? Can governments get their heads around AI?
I hope so.
Or is the horse out of the barn for it?
I think the horses are firmly out of the barn and they're running far into the fields, and every government is trying to catch them, because there's a knowledge gap between where the bleeding edge of the technology is, how it's distilled to the rest of the population, and where the government is in terms of its understanding of the technology and its potential. So I think we are well past, the horses are in the field, they might be going to a different meadow. I'm losing track of the analogy, because we are that far removed from where the knowledge gap with the government really is.
All right. Lots more to talk about AI. That's not going away anytime soon. Up next, we'll be back with Dan to see why Canadian natural resources is on his radar. Time to see what's on the radar for Dan Rohinton of IA Global Asset Management. He's talking about Canadian natural resources. You're liking that? What do you see?
Yeah, I think, once again, if you go back to where we're seeing in terms of the run, and I think what you see in the oil equity is the acknowledgement that oil prices have been rising off of a pretty substantial trough. And I would expect that the next few days and the next few weeks are probably good for Canadian natural resource. Diversified, solid production footprint, and close to major markets, and no debt, and a disciplined management team that's returning capital back to shareholders. If there's ever an oil equity to really stay focused on, it's definitely C&Q. But I do think it's interesting. It's on my radar today because I want to see the spike, and I'll be curious to see how long it lasts.
Yeah.
Because I do think that the move over the balance of time, so maybe not days, maybe a few weeks, I do think it's probably going to fade from where the open is today.
But do you think it'll fade back to where it was, like in the 60 down, 55, 60 in the last little while, or is it going to stay up above that, get more into a normal range, I guess?
Yeah, I think it's probably, you could argue definitely it was, and I believe that it was overly discounted in the high 40s. But do I see it sticking around the mid to high 60s? I don't think so. I think it's probably heading a little bit lower from where we open today. Maybe like hang around $60, if not in the high 50s.
Now, can Canadian oil companies benefit at all from Iran?
Yeah, directly.
Is there room?
The net pack just goes straight up. So oil price goes up, as long as Western Canada Select goes up, then they get the direct benefit as long as there weren't any hedges on.
But can we see demand increase, though, for Canadian, or no?
No, it takes too long. Too long. And I would argue, actually, one thing maybe to really think about in the oil market, and I should have addressed it earlier, is just look at what happened after Venezuela, right? Oil prices were weaker after, on the idea that more supply was going to come on board. So as the Iran situation settles in the way that I think it's driving towards today, I think long-term oil prices are going to see some pressure, because Iran is a major oil exporter that's been sanctioned to basically squeeze out the regime. So I think if the prospect of Iranian barrels flowing to the world that don't flow at a discount to China, I think that might actually loosen up the oil market over time. And the market might look into that in the future.
Okay. NVIDIA, the stock that everybody sort of loves but sort of doesn't love.
Yeah. I mean, I tell you, in valuation-wise, investors definitely don't love it. And I think maybe two things. The first one was phenomenal quarter, and they have actually their big product day coming up soon, I believe in 2 weeks, if memory serves. And the key thing there is it's the linchpin of the AI trade. You could say the bottlenecks have moved elsewhere, but you need the NVIDIA chips and the Avago chips to go. I'll be curious to see how the product day goes, and it is the harbinger of the AI trade. And I think there's an opportunity for the stock to actually rally from here, because the post-earnings sell-off seems to me a little bit way overdone.
Yeah, and it's been sitting around this mark for what, 6 months now? More than that, almost.
And numbers have been going up. So I think what it comes down to, investors of NVIDIA who are skeptical would say this is peak earnings, or next year will be peak earnings, and from there, you don't want to pay for a company that's got no growth looking forward to it. To which I say, if AI is as big as it's being advertised, then you're going to need a lot more chips, and those chips will need the best, will need to be the best, which will be the Vera Rubins, which NVIDIA is pumping out later this year and early next.
Okay, and last one, Apollo Global Management.
Yeah, you know what's interesting? So private credit and loan losses have really been burst onto the scene, if you will. And part of that has wrapped up across the private equity companies. The first set of the losses came through with the idea that SaaS stocks, proverbially the old Andreessen Horowitz would say, better than first lien debt. And those now we've shifted to nothing but a commodity. So there's some private equity portfolios that are filled with these things. Apollo's actually is not, but then the conversation shifted to private credit because loans were given out against some of these companies, and in general for data centers and other, call it off, I don't want to say off balance sheet debt, that's not the right word, off public liquid market debt. So private credit has really blown onto the scene. Apollo's a big backer of that, and I think it's interesting because I do think it's a buying opportunity for this company because I just don't see a world where, and it's important to be nimble in these situations for Apollo. So I don't want to say right here, right now, it's a screaming buy, but I am a buyer more than I am a seller today of Apollo. The reason why is you can't have investment grade and high yield interest rate spreads, as they're known, as tight as they are, while having private credit just go haywire. So I think either this is going to spread to the rest of the bond market, or Apollo is a buying opportunity today. I'm inclined to believe that Apollo is a buying opportunity today.
All right, and where do you see it going then?
I see it going higher over time in the next coming months. I think at 10, 11 times earnings, where it is about where it sits today, I think that's about the trough valuation. So as and if, I would assume but in the chance it's if, things calm down, I expect just the gravitational force for Apollo to be higher, not lower.
Okay, we'll leave it on that note there, Dan, but stick around. Still ahead, we're talking to Rachel Bartholomew, CEO of Femtech Canada, the country's first national network dedicated to advancing women's health. And our phone lines will open soon for our first call segment, 1-855-326-6266, or send us an email, firstcall@bellmedia.ca. Oil prices are surging. They're at their highest level in more than 4 years. Traffic in the Strait of Hormuz has come to a halt amid the escalating conflict in the Middle East. The Strait, which handles as much as 20% of the world's oil, is now at a standstill. Some experts say a halt lasting more than 25 days could cause storage tanks in that region to fill, forcing a cut in production. China has lowered its anti-dumping tariff rate on Canadian canola imports. The tariff was lowered to 5.9% from 76%. The move comes after the Chinese government dropped the original tariffs on Canadian canola products. Beijing says an investigation found that shipments were being dumped, causing material injury to the domestic industry. The levies will be in place for 5 years. Canadian energy firm Cameco has signed a $2.6 billion deal with India to supply the country with uranium. The agreement comes during Prime Minister Mark Carney's first visit to India, where he is seeking to build stronger economic and diplomatic ties. Cameco will supply more than 11,000 tons of reactor fuel to India from 2027 through 2035. Quick look at the markets right now, and you can see all of them in the red as we get close to the start of the trading day. Dow off by a point, NASDAQ 1.25, and the S&P 500 off by 1. International Women's Day is coming up, and we're looking at companies that change the social climate and Canadian economy for women, including Femtech Canada. It is the country's first national network dedicated to advancing women's health. Here to discuss the company's groundbreaking work is Rachel Bartholomew, the CEO and founder of Femtech Canada. Rachel, thank you very much for joining us today.
Thank you for having me.
Tell us a little bit to start what Femtech is and why do you feel it is so needed right now?
Yeah, so Femtech is the innovation and technology surrounding women's health care components. And so that can be anywhere from consumable goods all the way to genomic sequencing and everything in between. And why it's so needed today is women have largely been out of the conversation when it comes to healthcare. Here in Canada, it was only 1996 that women were actually involved in supposed to be involved in clinical trials. And so that means that we have 30 plus years of fundamental research into products that just has never existed before.
And when you think about, Rachel, just the opportunities and the gaps that exist in the Canadian healthcare system, what are some acute ones in your mind that really stick out?
Yeah, so we, in women's health in general, a lot of the focus has been on what we call bikini medicine. And so breast health, gynecological health, menstrual health, fertility, these are all the things that have largely gotten focus. But as we have developed through research, what we found is women experience heart attacks differently. Women experience autoimmune situations differently. And so there's a number of different conditions that really disproportionately and differently affect women. And so heart health, autoimmune health, we're looking at things like cancers that affect differently. So there's a number of different opportunities for innovations to come into these areas.
And now you started this, you launched in 2024, and it's now the third largest in the world. Is that have you grown that well, or is it that there's a space that needs to be filled here and people are finding you?
Yeah, there's a space to be filled for sure. So when we started, there was about 51 women's health companies across Canada, and now we're over 200 companies across Canada and counting. And that is simply just because as the awareness starts to grow around femtech and that the community exists for these businesses and these innovations to have camaraderie and to share their qualms and quarrels, it's really helped build that industry into now what the government's calling one of the largest and fastest growing sectors in Canada.
Rachel, do you see part of what femtech offers is the ability for financing, venture capital, and building those types of networks? Or is it a Y Combinator for women's health-focused enterprises?
Not quite a Y Combinator. We are very much focused on a larger kind of federal initiative here. So it's all about as much advocacy, as much as it is about educating investors on the potential for women's health. I'll give you some stats. So about 12% of our companies have raised funding, and only about 4% of them have raised institutional funding. And yet our companies in the Femtech Canada ecosystem have contributed to about 1,200 plus jobs on the Canadian market. And so even though venture capital has been slow to adopt, partially because of the lack of attention that has been given, partially due to the need to have a term, aka femtech, to put on these companies, what we've seen is these companies being able to be scrappy, be able to create jobs, create IP, create all the things that the government wants to see in order to create this ecosystem, and venture capital slowly starting to come on board now that we're having exits in companies like, Maven and Flow being a big unicorn status company. And so we're starting to get there, but there's still a little bit more time that's needed in order for us to get more venture capital interest.
I was going to ask you, how are the returns on these? Are people seeing a good return on their investment in them?
100%. But like I said, we need that time in order to be able to get companies to the level. We just haven't had enough time with the brand Femtech in order to see those exits and to see those unicorn status companies growing. But there was just an exit report that was released this year at JPM, so JP Morgan's healthcare conference. And so the data is slowly starting to be developed, which is another big pillar of trying to track these things appropriately.
And what's government think of this? Where's the government right now?
It's an interesting question. And so I was actually just in Ottawa this past week. We are trying to push a bill through called S243, and it's essentially a framework for women's health. Canada has not updated its women's health strategy since 1999 here in Canada. And it's something that got shelved and it never got attention after that. And so we're very behind. I think we're the 5th lowest developed country in the world without a women's health strategy. And so we've been pushing them. We've been lobbying and advocating on behalf of women for about 2.5 years. We're starting to see the recognition, but we're hoping that that turns into deployment for things like primary care, for research, for innovation, and for an investment fund that we can put towards women's health.
Okay, we have to wrap it up there, but Rachel, thank you very much for joining us.
Thank you.
Thank you.
Rachel Bartholomew is the CEO and founder of Femtech Canada. Well, as of today, China has suspended some agricultural tariffs on Canada. After the break, we'll dig into the impact this could have on farmers, and our phone lines are open. Dan Rohinton is taking your questions on Canadian and global large caps. Call us at 1-855-326-6266, and you can email us first call at bellmedia.ca. China has suspended some agricultural tariffs on Canada, which will continue until the end of 2026. CTV's Alex Karpa has more on what impact this could have on farmers who are feeling a sense of optimism ahead of the start of seeding.
So potential home out here for a bunch of yellow flowers this summer.
Curtis McRae is thinking about the upcoming farming season. His plans to grow around 2,000 acres of canola this year.
I'm holding the number very close to the same as last year, hoping for markets to rebound.
But last year was anything but easy. Punishing tariffs imposed by China on Canadian canola took a significant toll on farmers like McRae.
I'm out of pocket a bunch of money from last year. It took $1 billion out of family farms' pockets, and I don't think there's anybody thinking about replacing that.
As of Sunday, the 100% tariff on canola meal and peas and a 25% levy on lobsters and crabs won't be imposed by China any longer, a reprieve that will continue through to the end of 2026.
Initial reaction is optimistic because seeding's coming up soon, and hopefully I've made the right cropping decisions.
Prime Minister Mark Carney met earlier this year with Chinese President Xi Jinping, and the leaders inked a deal on electric vehicles and canola. Farmer Warren Ellis calls it progress, but says more needs to be done.
Better, but not the whole answer. I mean, it's better. It will allow some through, but there needs to be a lot of work done yet on that.
An economist says the suspension of some canola and seafood tariffs between Canada and China is a win-win for both parties, but says the duties could be reinstated if the relationship deteriorates again.
Diversifying our relationships, both economic and political, has advantages and disadvantages. In this case, the advantage is that we should be able to sell more canola and grain and other agricultural products. But the disadvantage is we no longer can depend on a reliable American partner to protect us.
As for McRae, he says he's looking for stronger support from Ottawa to help ensure family farms can weather future trade disruptions and remain sustainable for years to come. Alex Karpa, CTV News, Winnipeg.
Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including 2 upgrades for restaurant brands. Let's take a look at some of the notable analyst calls and recommendations. Restaurant Brands is getting some attention this morning, with Stifel upgrading the stock to buy from hold, and Piper Sandler also upgrading its rating to overweight from neutral. Both these upgrades come after the company's Investor Day presentations. Stifel stating the company has gained a stronger conviction in management's ability to simplify the business model, and Piper Sandler saying the stock is ready to enter a period of outperformance. And when we come back, Dan Rohinton takes your questions on First Call. Time for First Call, and that first caller is Scott from Mitchell, Ontario. Scott, how are you?
Oh, good morning to you both. My question is to Don. Don, on Capital Power, their earnings are coming up this week. I just wanted your thoughts on that. But also, too, I've seen target prices for $80 on the stock. In your opinion, what would make the company be able to achieve that target of $80? I'll hang up, and I'm a long-time holder of the stock. I just want your opinion on these things. Thanks so much. Have a great day.
Yep. All right. Yeah, so thanks for the question, Scott. So the best way to think about Capital Power is they have electrons and they have some surplus capacity, especially in Alberta, that could be used to basically power some of the data centers and basically the grid modernization that's going on. I do think I'm actually constructive on the stock. I think it is moving higher from here. What really gets it to they call it the $80 level. It's important to take analyst price targets with a grain of salt. They tend to be at a premium to whatever the stock price is today. But how do we get there? We get more clarity on PJM reforms and the ability to earn the attractive returns and permit more volume and the ability to basically get that debottlenecked across the Capital Power footprint, especially in the United States, which is where the incremental opportunity lies for them. And there's also the chance that they can also do more deals. So they announced actually an arrangement with a alternative asset manager to basically draw on capital to do creative acquisitions. So I think the pieces are there for Capital Power to move higher. How it gets to 80, I do think you need regulatory relief and persistent demand for electrons. I think we're going to move down that road. I just can't tell you exactly the timing. So I'd be a holder and I'm a buyer today.
All right, but it sounds like more pay attention to what's going on south of the border for it then.
That's right, yeah.
Okay, let's move on now. This email is from Fred. Are we still in a bull market for silver and gold after a big pull on silver? Well, today we are.
Yep. But, I mean, look, once again, if you said there was a multi-front war that opened up in the Middle East and gold was up 2% and silver was up 1.5%, I think we would all say that was a pretty boring reaction for it. And I think that tells you actually just where we've come from. It's important when we think about are we bullish or bearish to realize that these commodities are up hundreds of percent in months.
Yeah.
So we are, and what happens when commodities rise as fast and aggressively as they do is you have, and any other market asset, to be clear, you have a lot of margin, you have a lot of leverage, you have a lot of speculation that piles on. So expect volatility to significantly pick up from where we sit today. And I think what makes me cautious about precious metals as a whole is what are you playing for from here? I get that there's stablecoin demand. I get that there's demand from China, but what are you playing for $200 silver? Yeah. I don't actually quite understand what the incremental upside is that isn't already in the news, which means it's probably realistically mostly in the price too. So I'm cautious where we sit today on precious metals, although I'll acknowledge that everything is constructive. But normally speaking, when the perception is trees grow to the sky, they usually don't.
What about other metals, other options? Copper or platinum?
I mean, the base metals are a little bit of a different conversation, and there's a lot more industrial demand that underpins them. And I would say platinum, it's a little bit more of a niche commodity as a whole. Base metals are, I would say, not nowhere near in the bull market because they don't drive the animal spirits like precious metals do. So I'm a little bit more cautious overall on commodities, although I'll acknowledge this is very much a commodity bull market. Yeah. It's just that we are at the chop stage and the easy money's probably been made. So you really have to have a deep, deep conviction, Roger, that the world is going to be a far more volatile place than it is. Inflation is going to run rampantly out of control and all these other, call it scary things, to believe that precious metals have a giant leg higher from here.
All right. On that, we're going to move on to an email from Michelle. I'd like to get your guest's view on Intact Insurance.
Yeah, great company, very well managed, and they've got a pretty diversified footprint, and the margins across the board for Intact are far more stable than years past. So back in the day when it was an Ontario auto-centric company with a big Quebec footprint, it was more volatile in its underwriting combined ratios. I think those days are mostly behind us. The reason the stock's been weak more recently is that it got a huge defensive bid, and as investors came around and really started bidding up the banks, Intact's become this source of funds. So being defensive as a P&C insurer, well managed, you really know what you're getting, and investors basically took a step back. So I'm a buyer today. I think it's interesting, but it's not a screaming opportunity from a stock perspective, but it's very well run.
Okay, I'm going to sneak in. We'll get a couple more emails, hopefully get them in. This one is from David. What does your guest think of Salesforce? Is it a buy at current prices?
I think you have to believe the AI conversation is going to work and break in Salesforce's favor. Do I think it is oversold today? I do. Mm-hmm. Do I think it could be the case in 5 years that this might have been a fair price for the stock? I think there's a chance if Mark Benioff doesn't get his act together and comes out with a truly compelling agentic offering. So AI is front and center in software. I think Salesforce falls in the camp of at risk, but they have a chance to figure it out. And I think I would buy it on a flyer today, but I'd be very cautious around the 250, 260 level and wait for their strategy to actually come forward. They have this thing called Agentforce. I think it's going okay. They're really pushing it into their own distribution. But core Salesforce is a front-end client tool, and they were going further down market. And some of those customers might scoff at some of the prices and cut some of those seats. So it is, of the big caps, the most exposed to the AI disruption, and they really have to execute during this time. But is it too cheap today? Yes, but the future is more uncertain for them.
All right, we'll leave it on that note there. Dan, thank you as always for joining us. Dan Rohinton was with us today. The Open is next, and trading gets underway in a little more than 30 minutes from now. Have yourself a great day.